and gents, how are you? I hope you're having an amazing week. I'm back. Sorry about this week that I've paused the post of the videos, but I was very focused on the challenge. For everyone that follow my Instagram, you already know how that ended. But this video is not going to be about it, okay? This video is going to be about a week recap that I made a while ago, and that I'm now finally I can deliver it to you every single thing I want to, so I can make any video about everything I want. Because as you know, I'm not in Phantom anymore. You may see Phantom Trading written on the Trading View. That's because the video was made before I'm out of Phantom. I know that many of you want me to talk about it, but I'm not yet ready to talk about that. It was something that I wasn't expecting. And yeah, I'm not ready to talk about it yet. Maybe one day I'll talk about everything that I felt, everything that I feel. But now it's not the time. Now it's the time to focus on myself, to focus on everything that I want to bring you. And I'm actually relieved, because at the moment I can do whatever I want to, and I can post whatever I want in terms of my videos. So if I want to deliver you free sauce, I will deliver you free sauce. And that's it today. Today's not going to be a video for beginners. Today is not going to be a video if you don't know nothing about smart money, if you don't know nothing about supply and demand. Today is going to be a video if you're a bit more advanced, if you are already part of a community that teaches you supply and demand and smart money concepts. And yes, so I'm going to go through the potential trades that are available from the week 21st of February to the 25th. Now it's something that I'm going to start doing, delivering you recaps, because I know how you love them. I hope you can take value from this regarding everything else that's going on in my life at the moment. And yeah, that's it. When I'm ready, and if I feel the need to talk about it, yeah, I'll talk about it, but not now. So I just want to thank you from the bottom of my heart for every single message that you sent me. I think the last few days I received more love from different people than any time in any period of my life, because it was so many people supporting me, understanding me, saying, well, maybe I would have done the same, don't feel bad, just stand up and you'll bounce back stronger. And yeah, I'm not proud of what I did, but I'm very proud of how I tried to fix it. And get ready, because the show is about to get started. Woo! Good morning, everyone. I hope you're having an amazing weekend. So today I'm going to do something a bit different. I'm going to do a week recap on EU with all the potential trades I see available during the week focusing mainly on London session. Once you know it's the session I trade the most. And sorry about my voice, but I think I got a flu, or I hope it's not COVID. Let's see what it is. The way I'm going to structure this weekly recap is going to be simple. So once I always drop a morning outlook, what I'll do is I'll go through my morning outlook and with the zones and expectations that I share, and then we're going to really understand what price did to see if it was in line with the outlook or not, and if it's not, which is possible, trying to understand what could have been done better, drawing the supply zones and the demand zones to better position ourselves next time price delivers the same exact thing. So on Monday, the outlook I sent is this one. Monday was the 21st of February. If you take a look at daily, so we swept the liquidity above here, right? And after sweeping the liquidity, we reacted to this demand that was also a reaction and failure of this supply, right? So this is the point of failure of this supply. Afterwards, we tapped it, this demand, and we're now tapping this giant buy to sell candle that was previous this aggressive bearish move down. What we can analyze also is, although we swept the highs, price wasn't able to close above. So this still means that the expectation order flow of bearish is valid, right? Until this high goes with a body break, we're still bearish. And so after a sweep, we even increase the probabilities that this move is going to happen, right? So yeah, when we were here, what we could see is like, once we tapped this whole zone, we could still see higher prices to tap the refined zone of daily, or we could see price coming lower from here. That's why we take a look at the lower time frames to understand and to better position ourselves to understand what can be expected. So then when we take a look at the 4 hour, can we analyze here on the 4 hour, babe? So basically we have the same sweep here, right? We swept the highs, and when we swept the highs, we actually have a 4 hour change of character that can be either selected on this low with this internal range break, or this is actually our chalk, right? So this is our internal range liquidity break, because we understand that this is actually my swing high and this is my swing low, which means price is everything that happens here is internal range liquidity, right? We understand that. So after we had the chalk, we also had internal range break, confirming that potentially lower prices are now in place. When price reacted here, it came up, it actually reacted to this whole buy to sell candle, which is quite giant, right? It reacted to it here, and then it dropped, right? When it dropped, it came all the way down to this refined demand of the 4 hour, which we can see is also a reaction and a failure of this supply, right? So this is the point that caused this failure. And when this happened, we had a 4 hour bullish chalk here, right? But we know that the expectational order flow is still bearish, right? So we are expecting lower prices. When price taps this supply here, what we see is actually we have another chalk coming from the downside, confirming that price can still come lower. Obviously, we have all this sell side liquidity that can give us cause for a higher mitigation of the extreme to continue the order flow, but at the moment we're respecting all this, the supply chain, and also if we see this also swept liquidity, turning this zone into a very significant zone to trade from. Okay, this is what it is. We have a 4 hour supply here, and price was just tapping that 4 hour when we arrived the charts, right?
So then when we look at the 15-minute, which is this, okay, so when price reached the supply, what did we have? Well, we have liquidity here, resting here, right? This is the whole 4-hour zone, so price could react to this one or could still come higher to react to this one. If we take a look at the premium, we understand that price is already inside premium, so it's already well valid either on daily and 4-hour to short, right? And also on the 15-minute. We understand that this is our current high on the 15-minute and this is our current low on the 15 minutes, so the range is here. And we're now expecting shorts to coming from these zones, okay? Now, when we take a look at the zones drawn, what can we select? How can we understand what are the high probability zones? Well, first of all, it's very important to understand that these equal highs are still resting here, okay? Obviously, we take structure as a very significant factor to look for trades, but we always take in consideration the liquidity left behind as a potential zone for sweep and then continuations, right? So when price is reaching this zone, we need to understand that all this liquidity was still here, but on the other hand, we know that it eventually caused the break of structure, so it could react to this, but we have all this liquidity resting above. As you know, I trade on the EU, so I obviously know that price is going to sweep these highs before continuing dropping, and it's difficult not to talk about that at this moment because I know the price and I would be lying if I'd say I didn't. But yeah, so always take in consideration the liquidity left behind. Now that I know what price did, I try to understand why price did that, and it's simple. We may consider this a sweep, but the truth is none of these traded below this low, so I can't consider a significant sweep. So that's why actually price came all the way up to sweep all this liquidity, because if we actually take a look at liquidity, there was no sweep before of this movement down, so that's why price wanted to come higher to sweep all this liquidity resting above. Okay, so now when we take a look here at the 15-minute and talking about that liquidity, we understand that this is considered a sweep because this candle traded below this one, so there is a break here, right? So this can be considered a sweep. So this high was expected to be protected. So if we wanted to trade high probability trades, we should have been waiting either for this zone over here or for this zone over here on the 15-minute, right? I know I marked this one as it was, and it is a supply, right? Because it's a buy to sell. So when price reached this zone, let's replay price, sorry. So I had this zone marked also because it is a buy to sell, right? That obviously didn't work out. When I arrived at the charts, price was here. And now we see, okay, could we be potentially looking for shorts here? Let's take a look at what happened. Well, this is a demand, right? And if we see this as a demand, that we're obviously losing strength because price was tapping it and not being able to close above. So we see this as a zone that's going to potentially fail. Then we have one last reaction here. Price came all the way down, up, mitigating this supply also, and coming all the way down. Did any of this sweep liquidity? No. So we can consider that there's liquidity above also, right? So none of these moves actually swept liquidity significantly. And this is why potentially none of these zones worked. Anyway, if you were looking for shorts here, we can go to the 1 minute and try to understand if we could have been involved in a short here and why. So we wanted to see if there was a further development to understand if price was actually building bearish intentions. So we see that there is no sweep, or the chalk doesn't happen inside the zone. When the chalk happens inside the zone, we have a factor that actually increases the potential of this to happen, right? So when the chalk happens here, assuming that this is a chalk, when the chalk happens inside the POI, we know it's much better once we know that the first mitigation can just be inducement, right? Then if you take a look, this candle traded below this one, so the truth is this is not actually the low to consider for the shock. We would want the price to fail here, below here. And if we see price never came all the way down here to provide us a short opportunity. So there was no bearish order flow being established. So what we do, we don't rest on the 1 minute, we go back to the 15 minute and we understand what price is doing. And we see, okay, so we have this doji that can be refined to this wick that price can also react to. And here we have liquidity, right? So this can be a nice zone to look for shorts also. Always taking in consideration that we have all this liquidity that was not swept yet. Let's see if we could have been involved here on a chart. So we play price. Price didn't tap the zone. Okay, this zone was automatically invalidated, so I can delete it. Then going back to the 15 minute, then we have this whole buy to sell, so price can still react somewhere between here or come to this wick, right? So we're taking that in consideration, we're seeing it, and we wait for price delivery. Okay, price taps that zone, it still respects it. Oh, and automatically invalidates this supply. So we're not going to look for shorts anymore here, right? We go back to the 15 minute again. This zone, we can delete this zone. We can delete all this. And now that we are in the 15 minute, we see that, okay, price is approaching this zone. Will I be trading here in the middle of nowhere? Well, no, I'm not, because there's a lot of liquidity resting here above. So why putting my hands over the fire? I will not do this because that's not trading high probability setups. So I'll wait, okay, and oh, wait a second. We're just going to give you to come back to understand if there was actually potentially a short to look from here. Okay, so when price reached this extreme, sweeping the liquidity on these equal highs, now I could be looking for high probability trades, right? At this moment, if you take into consideration all the criteria, so we have a sweep of liquidity here on the left. So we have a mitigation of the significant POI, right? We swept the liquidity on the left, right? Swept. And then when price taps this, we actually see that we chalk above. Let's see if we chalk below. We never chalk below, right? So there was no opportunity here for me to look for shorts. Price just automatically spikes up. So none of this is valid anymore. This is about being patient, right? If you were patient enough to wait for confirmation to go short, you wouldn't get involved here. Then price swept once more the liquidity here, which was in fact, in my opinion, a nice high that swept liquidity from the left. So it could be a protected high, but if price doesn't close below, price is still respecting the expectational order flow, right? This is the high from the 15 minute. This was the high. We swept liquidity and we came to mitigate this extreme. If we refine it to the wick, look how perfectly it taps it. We had this significant move up. Why am I still looking for shorts instead of looking for continuations? Well, first of all, let's take a look at the 4 hour. Right here, right? We are in the premium zone. So an expectation order flow from the higher time frames is bearish. So if I want to trade the high probability setups, I'll be looking for shorts, right? What happened on the 4 hour here? Well, if we see, we swept the liquidity here above, you see? So this is the high, we just swept liquidity, and we're actually reacting to the refined wick over here. This is like a refinement of the unmitigated upper part of this wick. So when we go to the 15-minute, we understand, okay, nice, so these are all done. We are inside a daily, right? And we're also inside a 4 hour supply. So we're good to go to trade shorts. The expectation order flow from the 15-minute is still intact because we didn't break above this high, right? So this is the high, this is the low. We didn't break above this high, which it means that the bearish expectation order flow is still valid. Let's see if we can try to look for potential opportunities here. We know we swept liquidity here, which is a very important factor. And now we mitigated a significant POI. This is inside the 15-minute. And now if you want to wait for a chalk would happen because this candle is the candle that sweeps the highs, trades below this one. So this is actually the zone I'm looking for. So yeah, let's see if we have opportunities to come lower. Price is reacting to the demand. This is demand, right? Price is reacting to it. Boom, and it automatically fails. What we see then is that this candle, there is a sweep of liquidity here on this flip, right? And once there is a nice pullback, sweeping liquidity and continuing lower, what we can then try to look for shorts is here. So now we have two chances. Obviously, I remember prices. It's very difficult not to remember price. Now we're looking for shorts, and what can we do? Well, we can then set our limit here. Once all the criteria is met, mitigation of a significant POI, we swapped liquidity, we chalked, demand failed. Okay, I'm ready to go. Bearish order flow established, I can short. So this is what we can do. We could have set the limit here, taking this as inducement. So not only this flip swept the liquidity above, but also is inducement here. So this is actually a nice and a very significant limit to look for. But oh well, price never gave the chance to continuing to tag you on this trade. So yeah, basically we would only be involved in this if we covered the whole buy to sell zone. Then we would be automatically tagged with this movement with a 2.5 pip stop loss. If we go to the 15-minute and we see price delivery, we actually see that there's a 15-minute chalk over here. This is the reaction to the supply, and this is the last sell to buy that caused the failure. So this is demand. We see demand failing here. So if we go to the 1 minute, we see that, well, price came to this demand, reacted to it, create liquidity. So this candle is trading below this one, right? So this can be considered as inducement. And so we have a sweep here. If we have a sweep here, well, what is this? This is a high probability zone to look for entries. This is the extreme that caused the failure of this demand. 15-minute demand, right? So we can actually put an entry here. We can set our limit. Then where would be my target? Well, following the 15-minute expectation order flow, our target can completely be this weak low over here because we're going in line with the expectation order flow. But it's up to you if you select 10R, if you select the low, it's entirely up to you, right? If you selected this low, this would be 23-hour trade, okay? Now, let's see if we get tagged in. Oh, there you go. We're in this one. And now let's see if we have some continuations coming from here, right? So we know this is a low we want to see get taken out because this is the man, right? So let's see if we actually see something. If we wanted to wait for a confirmation entry coming from this reaction, well, we know that this is a potential chalk. This is a sell to buy, so this is also a demand. We don't see this demand as significant because it actually didn't do basically nothing, but it is a sell to buy, so it is a demand, right? So what we see then is, okay, this demand automatically failed, giving me another confluence that supply is still in control. When we take a look at the previous trade, were we risk-free already? Well, yes, we were risk-free already because this was a 1 to 4. So if we were risk-free already, we can actually enter on the next trade again. This is the next trade to look for. Okay, we're tagged in. And our break even will be here, right? Okay, tagged in, boom. Then we see this demand holding, right? If you want to keep following the confirmation entry, double confirmation entry, well, purely based on demand failing, right? We see this sell to buy as demand. We see demand failing, right? This is the whole demand. We see price reacting to it and it failed. So it doesn't sweep liquidity. This is all part of this extreme. So there is a potential entry here, but a bit more risky in my opinion because this demand was holding, right? So until we see a failure of this demand, it could be riskier to take this trade. So if you were involved in these two, there's possibly the potential for you to be involved in this one once it's risk-free already. But at the same hand, if you see demand holding, you may just sit on your hands to understand if price really wants to go lower. This would be risk-free. Here, I think we never got tagged in. Yeah, we never got tagged in on this one if we were just selecting this candle. If we were selecting the whole candle, yeah, we may have gotten tagged in. Let's keep playing. Prices. Okay, now we see this demand failing, right? So now I'm interested in getting involved on another short. So then what do we see? Well, we see price coming up, coming lower, coming up, coming lower. So this buy to sell, which was the extreme that ultimately caused the failure. So this is a reaction. Where is the extreme that caused this failure? Because nothing here in the middle has a clear inducement or swept liquidity. So I'll be happy to play the extreme. And that's what you can potentially do. Wait for the extreme to get tagged, right? And when we go to the 15-minute, what we see is that price is now at can be considered a demand zone. So this can be a catalyst to then continue with the shorts. And on this catalyst, did we have any chance to try to edge our positions here? No, at all. It did just automatically fail, right? On the other hand, we have a supply here. That is the supply that caused the failure from this reaction to the demand, right? And didn't enter on this one, but we have a potential entry here that price tagged and continue dropping. Like basically what happened is price is following a supply chain. Price is following a supply chain, right? Mitigates here, and then it comes here, and this actually swept liquidity resting here above, because there is liquidity here. You may agree with me, right? This candle came lower, So there is liquidity here, it's swapped liquidity. So we still have this zone that can be considered valid all the wick here. And look what happened. Price comes to revisit it beautifully and then drops, right? Why? Because this wick was mitigated by this wick. Obviously, if you wanted to enter here with a trade here, why not covering the highs? Obviously, cover the highs. This is just a 1.5 pip stop loss. Of course, you can cover the highs. Just showing you the potentials. And yeah, so basically this is it for the London session on EU for this specific day. Now what we'll do is we're going to revisit the outlook from Tuesday, and then we keep trading, okay? Our day is done here. We could have potentially closed all our trades at 10R. And this could be a day that we would have, so this was not tagged, we can delete this one. This was not tagged, we can delete this one. So yeah, we could have ended our day with 20R this day, right? It's quite a nice day. Or you could just hold your trades to the bottom, and then if you did, well, there you will still have your trades running, and potentially you can have like 40R on these two.
Hey, don't forget please, subscribe this video, hit a like, activate the notification bells. That way you will help me and the algorithm of the YouTube will work better in order for my videos to reach more people and I can get more subscribers. So you help me, I help you. That's how it works.
Okay, so the next day we arrived the charts, and this is the outlook I shared. So price was keep dropping, right? And basically what we were doing today was expecting lower prices. As simple as that, right? We tapped this demand. This demand was not strong enough to push price higher. So this is probably going to get taken and price is going to continue dropping. As simple as that. If we take a look at the 4-hour, two scenarios possible here in my opinion, right? We can still react to this demand because it's the demand that caused the bullish chalk, and once price is being quite slow, we would have this, right? Price mitigates that, is inside this demand, so we may see price coming higher to continuing following the supply chain. Taps demand, taps supply, taps demand, taps supply, taps demand, taps supply, and continues with the expectation order flow, right? And then if we take a look at the 15-minute, we were here. We have this supplies, but one, it's in the discounted zone. It's also in the discounted zone of 4-hour, right? So we have these supplies over here, but price is still in the discount zone out of the 15-minute, right? And also if you take a look, price is also still in the discounted zone of the 4-hour also. So we're not very well positioned to look for shorts. So what I think it's better is wait for a higher zone that's better priced to look for shorts. Remember, this is all about probabilities. Can one of these 15-minute supply hold? Well, yeah, of course they can, right? But the question is, they're not well in price, right? So if they're not well in price and price just broke below the 15-minute, now we're expecting prices to go a bit higher before, and to a better value in price before keeping dropping, right? Yes, so we are bearish and we're inside of 4-hour zone, so it's always better to wait for a 15-minute chalk, right? Let me just come back in price. So we're well priced to look for longs, and if we take a look at the 15-minute, where would be my chalk if I want to go long? And why would I wait for a 15-minute chalk? Well, because I'm inside a 4-hour zone, right? This candle traded below the previous, it swapped the highs, right? We have this extreme and we just tapped that extreme. So this is actually the zone that caused, so we see price creating this week, then we see this inside bar here, Then we see price mitigating that, and then we see that this is the extreme that caused the failure supply and also the 15-minute chalk, right? Okay, if you go to the 1 minute, what do we see? Well, we see that there's still something unmitigated here on this demand, right? And we see that price not only came to mitigate deeper the demand below, but also swept liquidity. We know trade away from sweep. So if we swept liquidity and demand was still holding because it didn't fail, right? Because this demand here was still holding. And this was actually the one that caused all this aggressive move to start. Then in that case, if all the criteria I want to see happen, I will trade. And what do I want to see? Well, you already know. I want to see mitigation of a significant POI, which we are. This is the 15-minute. I want to see this chalk at the top. And if this happens, this is obviously, if this supply fails for me, it's better because this is actually the supply that caused this internal range break. But yeah, we also have a supply here that we may consider, although this one was not strong enough to create a body break. Let's see what price tells me. Okay, this one failed. So now we could be looking to enter here. So either you just put your trade on or you wait for further delivery to understand that bullish order flow is done. We already know that we're coming from a 15-minute chalk, so we are putting the probabilities in our side, but we may wait for further delivery to understand if it makes sense looking for a continuation here. And what do we see? That's why patience is key. Look what we see. We see equal lows, liquidity built here in the form of equal lows, so there's inducement here for this POI. This POI swept liquidity on the left, and this POI not only caused the break of this high, the previous high, but also caused the failure of this supply here, right? So this for me adds confluences for me to take this long. This is a very nice long in my opinion. What would be my target? Well, here, this is we are counter trend, right? So we don't want to target bazillionaire. We just want to target a zone that potentially price is going then to react to continuing lower with the expectation order flow. So why not this supply that is inside the premium of the leg? This is inside the premium of the leg. This is a nice supply to put my target on. So yeah, look. Either this or 10R, it's up to you, right? This is a 30-hour trade. Then what you see is, boom, get tagged in and drives up. So now, is there any opportunity for me to try to get involved in this trade in the middle? Well, let's see, right? If you weren't tagged on this one, which I actually wasn't, and I'm going to tell you why I was not tagged in this one, because I didn't pay attention that this was the demand that caused the 15-minute chalk. Yeah, and that's why it's so important to take a step back or zoom out and understand what price is telling you in order to add you confidence to execute. I didn't see the chalk, therefore I didn't take the long. So now at this point, what can I do? Well, I'm going to see what price is reacting to and doing to wait for confirmation to try to look for a long from here. This one here, right, that we can consider the whole buy to sell zone as a buy. Price reacts to the supply, came down and boom, failed. So what was the point that caused the failure of this 15-minute supply? Well, we have another reaction here further, and price came all the way down and ultimately caused the failure, right? So what can we see now here? So now we can see that this supply failed, this liquidity being generated here, and we have this demand in the extreme, right? At the extreme. That this candle was mitigated, this candle was mitigated, and this candle is the last sell to buy. Now you can actually enter here covering the lows, which would be a 5.5 pip stop loss, and would give you a 5 are our trade, or you can wait for further price delivery to confirm you what's going on. So what we see after, we see this trade being tagged, and we see this supply failing, right? This supply failing. Initial reaction to the supply mitigates the demand, and boom, fails the supply, which is this extreme turns into a high probability zone to trade from, also because it's following the chain that's causing the supply to fail, and it also swept liquidity and has also inducement all here. So yeah, this is the one I took because I wanted to better position myself, because I didn't want to enter on this and then get swept because of these weeks, because price could just do this, right? I came here, sweeping some liquidity, resting here, and then going away. So yeah, I didn't enter on this one because price could sweep. Set my limit. If you wanted to play just the wicks, it wouldn't work this time, right? It's still 3.5 pip stop loss, but it's still 7.5 RR. It's still a magnificent trade. Now that you see this price delivery, you ask yourself, okay, Tatiana, do you take off your trade? And I said, no, there's no reason for me to take off my trade until price reaches this zone, which is my target, right? So price is just generating liquidity and confirming the cause for lower prices. Until this is mitigated, I'm not going to just close my trade, right? And so you know what happened next? Price came all the way down, boom, tags me in, and there he goes. Target hit 32 if you enter on this one, plus 5 plus 7.57. Remember the shorts from the previous day? They hit our target. So currently the week we are plus 22 plus 20, right? So Monday plus 22 plus 20, and now we have plus 32 plus 5 plus 7.5. This is our currently results. Okay, this is all RR. And yeah, what time was it? Well, it was 10 a.m. Could I still be looking for trades? Well, yeah. So now that price reached this zone, which is, in my opinion, a nice supply to look for trades, I can try to short here, right? Is it well in price on the 4 hour? Yeah, we're just inside the premium also, so it's a good zone to try to look for shorts. Let's see if we have that for, okay, nice. Okay, so if I want to be looking for shorts, I know I have all this liquidity resting. By the way, price just swept this liquidity over here, which is nice, giving me more confidence to take a short from here. Then we also have this highs that price can sweep, so we already have a sweep, so it's nice. Sweep of the highs. Then if you want to wait for a chalk and the supply and demand failing, we need to put our price alert here. And what we do is we draw our demand. Okay, this is no longer the zone I'm looking for. At this moment, I'm happy because it swept the liquidity above also, which is nice. So for my chalk, I have now this high and I have this low. At the moment, this is the demand I want to see failing, and ultimately the one below also, of course. We have a reaction to the demand. Boom, it creates a new high. So now at the moment my chalk just changed here. Oh, and at this moment supply just failed. We may still look for shorts, but at this moment when supply failed, well, it tells me that demand can still be in control, right? If we want to play high probability trades, I wouldn't be trading because this is a supply failure, demand will be in control, so you see, and glad we didn't. Glad we're not interested in taking that, because the trades that are actually working are longs. So at this moment, yeah, then this was what happened. And then you can ask yourself, okay, Tatiana, why not trying to look for continuations? Okay, so why didn't I take a continuation here and why wasn't I looking for a continuation here? Well, for the simple fact that we are already, if you take a look at premium of the 15 minute. So if we are in the premium zone, we're in a good place to short, not too long, right? So we were at the same time quite far on the legs, so that's why I didn't take it. But anyway, if for instance we were on the discounted zone, let's see how we could have spotted a continuation here, okay? And let's pretend you forgot that you weren't on the premium zone and you were looking for continuations. This we can consider as a potential loss if we wanted to take a continuation trade based on the supply failure of the demand, okay? So this is -1R. And so now it's already 1 p.m, session is done, Tuesday, -1, right? Nice. Okay, let's take a look at the outlook from Wednesday. This is the daily, right? We're currently inside this range. It's a very rangy zone that you can just set out and just set a price alert at the top and a price alert at the bottom and just wait for them to develop. But this is daily, right? So intraday we can have potential trades coming from here. So in my opinion, this is valid to look for trades. When we go to the 4-hour, what do we see? Well, we see that price is respecting the supplies, right? If price is respecting the supply, and it's now, so we tap the demand, tap the supply, tap the demand, tap the supply, came deeper to mitigate probably 15-minute POI, tap the supply, and now what is the expectation? Well, the expectation is that price is going to go lower, right? That's basically it. When we go to the 15-minute, we have these, right? And on these, we may see that price is currently at a 15-minute demand, right? And this was quite a strong demand because it's basically the reaction to this zone. Boom, came all the way down, mitigated the demand that caused also the supply failure of this one, go all the way up, aggressive momentum up. And so if we want to look for shorts, we should only do it at premium, right? Especially if it's in line with the expectation. So at this moment, we can actually try to look for long. So if you go to the chart, and we're just going to hide all this. Okay, exactly here. This is where I woke up and sent you the markup. So if we take a look here, we actually see that there's plenty of liquidity resting above here, right? But once this candle swap this liquidity over here, for me it turns it into a significant POI, especially because if we see, like, this is just following the supply chain created here. So yeah, that makes this a significant POI to look for shorts, and also because, yeah, it's in the premium zone of the 4-hour. What we can do is go to the 1 minute. If you want to play the safest move, once this is counter trend, you may wait for a 15-minute chalk, right? And where would happen a 15-minute chalk? Well, a 15-minute chalk would happen here. Okay, different story now. And actually a better zone because we just mitigated the wick, right? And now if you want to play safer, you can wait for a 15-minute chalk would be here. This is like the potential chalk. You can draw your line from the beginning so it won't happen to you the same that happened to me on Tuesday. Once that 15-minute chalk happened, I didn't know it was happening, and then I didn't take that long. So if you just put your line over there already, if price delivered that chalk, you already know that is the line for the 15-minute chalk, right? So yeah, this is what happened. Boom, 15-minute chalk. You could have got involved in this one just because and this one, right? Just because you had a limit from the previous day, because this was actually a significant POI. Okay, so after this chalk, even if you wanted, there was no opportunity for you to be tagged here. Is there anything that we could have done better to try to get this movement up? Well, in my opinion, there isn't, right? We don't have here a significant supply that we have a reaction to. Yeah, we have a reaction to this whole buy to sell range here, but price never came back to this zone, so there's no opportunity here to long. If you take a look here, price is just tapping one more time the supply from the 4 hour, right? So if we go to the 15 minute, what we see is that when we mitigated this demand, there was not, in my opinion, any opportunities for you to get in. So we are now inside a supply. We see price mitigating high and high and high. We have this week over here, right? And what we see is that, let's revisit, okay? This is inside premium of 15 minute. This is inside premium of daily. This is inside premium of 4 hour. So yeah, that's this week's swap liquidity on the left. So I would be happy to take this short. We didn't have structural liquidity resting here, right? We swept those highs and then we swept the lows, right? Okay, so this is it. What could you've been involved in? Well, here you could have tried to enter here, and when you see this demand failing, you could have tried to enter. You had to be quick though. You could have tried to enter here because this reaction actually swept liquidity from this candle. So you could have tried to enter here or put an entry at the extreme. It's up to you, right? We know that the extremes can always be valid. Then what we see, if you were quick enough, you could have entered on the decisional because it made sense. It swapped liquidity, so the decisional makes sense. We had to had 3.5 pips stop loss to cover the highs, or just put a limit on the extreme and the decisional, or just put a limit on the decisional up and wait for a confirmation again at the extreme. So we're tagged in, boom, we're risk-free. And what happens next is that price tags us out, okay? There could be another potential entry here to enter based on the next breaks, but once there was not like a significant shock here in the demand failure, I didn't enter on the confirmation entry. And yeah, this was a break even. Let's add here on Wednesday. BE. Wait. Then what do? We go to the 15 minute, try to understand what price is doing. And what we see is now price swept these highs and came to mitigate the extreme. So we may want to try to look for long or for shorts. And how do we look for those shorts? Well, if you want to look for shorts and if you want to see a 1 minute chalk, my chalk will be in this high and in this low. So there was only a chalk here at 11. So we have this demand here. And we see price coming up and then coming down. We have inducement here. We may consider this as inducement here, but this supply here doesn't give me reason enough to look for shorts. And so therefore no trades apart from this loss, from this break even on Wednesday. London session is done. Let's get to Thursday. Okay, now let's take a look at the 24th of February. This is the daily, right? So what happened was, yeah, you see this aggressive move. There was opportunities during the New York session to short, But once this is my trading style, I think you can take more value from my recaps if I just do exactly what I do on a daily basis. For some of you to understand the potentials on London session, we had another internal range break. We know that supply is still in control and is still pushing prices lower. Then if we take a look at the 4 hour, we see that we have this supply over here and this supply over here, which is the supply to demand, right? This is a demand to supply, right? And we also have this at the extreme following the supply chain. This is at a better zone to short because let's take a look, okay? This is, oh, what's a bad line? I'm so good drawing lines, whatever. You know that this, if you follow this is still in the discounted zone, okay? So not very well priced. Reacted to the 15-minute demand, but didn't react to anything specifically on the 4 hour. So we still expect lower prices, right? So here, now if you take a look at the 15-minute, price was here. It tapped a 15-minute demand. And now if you want to continue with the expectation or order flow, well, we'll wait for price to tap a supply, right? We may try to get an opportunity to long here if there is a demand chain obvious and clear. Okay, so we were here, right? What was the 15-minute demand I was talking about? Well, was this sell to buy over here, okay? Why did this is a demand to supply, right? So we see here a supply. Oops. We see the reaction to that supply, and then we see that failing. Price was here. Let's see if we can take, by the way, the supplies I show you was this one, okay? Because it's a demand to supply over here, you see, boom. So it's well and priced. Now we had a boss, we had a 15-minute boss. And so this is my high in my low. So this is actually right there at the premium zone. So this was the supply I was waiting. And what happened is simple. Yeah, price never gave me the chance to enter on these shorts. And now price tapped this daily extreme, right? So we're right here at the extreme. So once we are inside a daily zone, a 4 hour zone, what we want to see is a 15-minute chalk, right? And there's one right here. Look. We swept the lows and we swept these highs. What caused the chalk? Well, we have this demand over here. And we have this demand over here where prices currently is, right? So this candle can serve as inducement for the zone below. Okay, we had a 15-minute chalk. We are inside a daily zone. We now go to the zone that caused the chalk to look for entries, right? What do we have? Well, this is the 15-minute chalk. And so in that case, this is the extreme that I want to be looking for longs. I can set my limit here. The question is, did we sweep liquidity here? Well, there is a buy to sell here, so we chalked below, we chalked above, right? This supply failed, and so there's nice to look for along here, right? So what happened is, well, look at this, tagged in. Our break even would be here, right? And oopsie daisy, that's a loss. It's part of the business, isn't it? Thursday, 1 minus 1. The question is, could we be involved here? Well, if we draw a 15-minute zone here, we understand that the only zone that we can refine is here, right? So we actually tapped the 15-minute zone, refined. So what could have been done better is the refinement of the 15-minute zone would lead you to only needing a 1 minute chalk, but that 1 minute chalk only happened here. And so you were never tagged on this one, and if you were waiting for this to be tagged, well, this would be actually another loss that you would have taken. As simple as that. Yeah, so one lot for Thursday. This is 2 p.m. already, so London session is done. Let's go to Friday. Daily, swept the liquidity below. So now that we sweep the liquidity below, well, we are expecting higher prices and then lower prices, right? Because we just swept the liquidity. So either price is going to break, then come higher and then come lower, or once we swept liquidity already, well, we can actually now be heading up. So when we take a look at the 4 hour, what happened here? Well, we swept the liquidity also. And is there something significant here? Well, in my opinion, there's nothing significant on this demand, because if you take a look left, this didn't react to nothing. So yeah, it is a supply, sorry, I said demand. It is a supply, but it didn't react to something significant. So it's likely going to get ran. At the same time, we're not still in the premium zone. So what we may see is like price reacting to this, coming lower and going up. And if you take a look at the 15-minute, what was drawn here, if you take a look at the previous and before, it's exactly what happened. So yeah, this was that 4 hour zone that we could see price reacting to come lower. But this is the demand we want to look, because even if it's counter trend, this is the demand that caused the 15-minute chalk. It's a supply to demand, it's a sell to buy. And it has all this inducement above. It didn't sweep liquidity on the left, but it has inducement above before the mitigation. So this is actually a very nice long to look for. Also, we can take some shorts from here. Yeah, obviously we can. They're pro trend. It's inside the premium zone of the 15-minute. So they're nice shorts to take from. Okay, so basically what was drawn is easy. So at this moment, we have this supply over here. You can consider this whole supply, right? We have this supply over here. We can wait for price to tap it to see if we have some short opportunities. What happened is that price came to mitigate this buy to sell wicks, which sometimes happens also. After that, if you wanted to get involved here, how would that have been possible? Well, once price reacted to this one, and I wasn't expecting that, I didn't get involved. If you wanted to get involved after seeing that supply, well, it's easy. It's just applying the same concepts over and over again, right? It's like exactly the same story before. Like this, maybe consider liquidity resting above, but this candle, if we want to be a valid inducement, this had to come lower, breaking this low, then coming higher, and then continuing. But once it didn't break below, well, what tells me that the decision is the one that's going to be taken instead of the extreme nothings? Then here it's the same story, right? We don't have inducement, so why would we take this decision on there? So now after we see this failing, this is a different story, right? Because now we have inducement here. Now we have this inducement here. So if we want to get involved in this one, it's a completely different story, because we can get involved in this. That is also a confirmation entry from this. Look, we have a chalk, we have a supply failing, and we have inducement. So this is, for me, this is a valid trade to take, and coming also from the supply chain. What happens is that, boom, you're done. Why? Because price wanted to mitigate something here, which is, how do you understand that? Well, if we take this as a demand, then we take this as a supply, and yeah, that's what price reacted to, right? We need to justify what happened. Thursday we can have, not Thursday, Friday we may have -1, 15-minute. So now what are we expecting? Well, we were expecting price to tap this demand, right? We could have been involved in this one. I'm actually counting this one, but I wouldn't be trading this -1 because I wouldn't be choosing this POI. But anyway, let's face it, let's just put -1 here, so it's not just winnings, right? So I think it makes more sense. So if we go to the 15-minute again after that loss, now we see there's an opportunity here to re-enter. What caused the 15-minute change of character? Well, this is the high, this is the low. So the last buy to sell that was not mitigated is this one, right? That's what price came back to it. But for me, when price came back to this, we broke the highs, we broke the lows, and well, yeah, you could have been involved in this supply, but you had all these probabilities to enter from, so it was not clear enough to take shorts. So yeah, I missed the shorts. And then what did price do? Well, price just tapped the demand. I was looking for longs, right? So I'm looking for that long. What do I want to see? Here we can wait for a 15-minute chalk if you want to. And where is that 15-minute chalk? Well, we take the lows here. We take the lows here, right? And if we want to see a chalk, we need to see these highs going. So we go to the 1 minute, and now we see where is the 15-minute chalk. Okay, potential 15-minute chalk is here. So let's see. Okay, nice. 15-minute chalk happened. So where is the zone that I can be looking for trades? Well, we see the supply failing, right? And we see inducement here. So we see that this swept liquidity here. So you could have been putting a limit here and trying to look trading from this. Personally, I saw this as inducement for a deeper mitigation because the extreme was quite far distant. It was quite a strong sell to buy that, so I saw it as an inducement. But anyway, once I see that decisional as valid, I will take in consideration that loss also, okay? I already know it's a loss. It's hard not to remember it's hard not to trade only one pair, not remember the PA. It's completely impossible. So yeah, what would be my target? Well, for me that's simple. My target would be this supply in the discounted zone. Simple as that. Boom. 31R. And even if you take that hit, it would be no problem at all because you would compensate on the next one. Yeah, that was it. Let's see what price does, right? You see, like, mitigation of a significant POI, it swept liquidity. Look at all this liquidity resting here. Swap the liquidity, we have a chalk, we have a supply failure, we have everything that we want to see. So then, boom, automatically lost on this decisional. Boom, tagged on the extreme. It hits your take profit. Boom, smash el papi. Oof, I'm tired. So today, -1, another one, so -2, plus 23. So let's do some math. 22 plus 20 plus 32 plus 5 plus 7.5 minus 1 minus 1 minus 2 minus 23. Okay, 1 week, 105 are available. Just entering pretty simply on trades, intraday, get in, get out, boom, that's it. The more I do this, the more I see the potential that the market has, and yeah, come on, I didn't reach yet a state where I can do, where I will spot all these from right through. This is like after price delivery, it's much easier of course, but it's so simple. And when you actually go do your EODs and you understand what you didn't spot, like the 15-minute chalk, that trade that I didn't get involved because I didn't see that 15-minute chalk. The zone that causes the 15-minute chalk is usually respected, especially if coming from a 15-minute zone or a 4-hour zone. And yeah, I hope you take value from this. And it's so easy. It's like just doing the exact same things over and over again. The potential is all there as long as you are patient enough to take it. Don't forget to be grateful every day, guys and girls, and please pray for our beloved ones in Ukraine and Russia. Everyone is suffering. If any of you that you're hearing me are close to this, I hope you stay safe. Take care. We're all here for you. Have a wonderful day and have an amazing week. Keep smashing El Papi. Bye-bye.
So yeah, that's it. Thank you very much for everything from the bottom of my heart. I'm so blessed to have you. Take care. Let go!